What a month! It has been a complete roller coaster month with growth stocks. Hello everyone, welcome back to the channel. Hope you are having an amazing day today. Happy Memorial Day. Today we are going to do monthly series of stocks that I'm buying or watching this month. Explain really fast why and more. We'll also do last month recap as I always like to show you guys my past picks and how they have done every month, every quarter and every year. If you are new to my channel, which it says that 68% of you watching are new and are not subscribed, go and subscribe and smash that like button. CC really helps the channel out and it's completely free for you guys, and also help me continue posting this kind of videos. So first, last month I talked about 3 stocks that I already own, and you are going to see why I said this month was a roller coaster month. The first one was Wish, which is down about 37% since my video on May 7th. I have a video explaining more in depth what is happening with this company, but in summary, there is a lawsuit going on around Wish, which if you ask me, it is nothing to worry about since does not make sense at all, and it is something that tends to happen with new stocks. And also, it's dropping because seemed like the CEO sold off their shares, but that is not true at all. All of that is explained in that video, in case you would like to go and watch it after this video. The second stock I talked about last month was Fubo TV, which is actually up 37% since I posted that video, since they reported excellent earnings last month, which we'll talk about that later on the video. Lastly, the third stock was Lemonade stock, ticker symbol LMND, and that stock has gone up 14.36% since I posted that video, even though it dropped a little bit more after the video. You guys know I have been investing in this company for almost a year, and it has been a very volatile year, but still have had nice returns. Now, today I'll talk about 4 stocks which I already own all of them, but are still looking very, very interesting right now for me. The first stock is part of the FANG group of stocks, Amazon stock, ticker symbol AMZN. I invested in Amazon in 2019 and obviously regret not buying more at that moment, but even 2 years later and with almost 100% return in my position, I still find this company very appealing and good to continue investing. Their growth is impressive year over year and quarter over quarter. They are such a giant and dominant company, and a very diversified one as well that continues growing every single year. Now, many may think that it has a reach valuation that since it looks like that because of their metrics, but let's check some things. First of all, Amazon is trading at $3,223 per share with a huge market cap of $1.6 trillion. It has a trailing PE of 61.29 and a forward PE of 53.76, a price to sales ratio of 3.94, and surprisingly a PEG ratio of 1.30 because they are factoring in the amount of growth this company has been having and could continue having year over year, since the PEG ratio is calculated by dividing the current price of the stock over the earnings to growth rate. And even though everything above 1 says that the stock might be overvalued, it is still way better than almost the rest of the FANG group of stock. The only one with a better PEG ratio is Facebook, but the rest are way higher, or a little bit higher than Amazon. With this, I'm not saying that the rest are bad investments, not at all. Not at all. I love all of them. Just that if we compare with this ratio, Amazon is way better. Now, as of 2019, Amazon dominated the e-commerce market by far, which it is still like that nowadays as they have been growing massively year over year. They are also into the streaming with Amazon Prime Video, in the gaming industry, cloud business industry. They have a lot of different businesses, and they just announced that they just purchased MGM, which will give them a lot of blockbusters content. This is Amazon's second largest acquisition after Whole Foods, which they are expecting it to help bolster Amazon Studio with time. Many say that they overpaid for this deal, and some say that it will actually help them increase their streaming market share. And the truth is that we just gotta wait and see what happened and how this works out. Second stock in this list is a streaming service well known as Fubo TV, ticker symbol FUBO. I have posted many videos about this stock as I see a nice potential in it, and I started investing in it earlier this year, which means that yes, I bought at a little higher price than I should have, but I see a nice potential in this company in the long term. Their advertising revenue has seen an impressive growth year over year. Their net loss margin has improved a lot from negative 142% to negative 58.6% since 2019. Their expenses have improved a lot as well, as before they were not making money out of their paid subscribers, as subscribers related expenses were 152% in 2019, 114% in 2020, but finally in 2021 quarter one they were able to make money out of their paid subscribers as those expenses decreased to 95%. I do want them to continue improving that margin with time though. It is currently trading at $23.74 per share and has a market cap of $3.3 billion, a revenue of $330 million in the past 12 months. Even though they are a growth company, they have $459 million in total cash in their balance sheet and total debt of $331 million, but an excellent current ratio of 2.36, which is actually impressive for any growth company. Now, they are expecting to report a nice revenue growth of $121 million for quarter two, which would be a year over year and quarter over quarter growth, and a full year revenue of $525 million with almost 840,000 paid subscribers, which would be a huge growth again year over year. And as this article said, Fubo is in a great position, first live TV, and even though most people are subscribers of at least one streaming service, Netflix or Disney Plus, subscribers have either no or very limited access to sports content, and live event content is slacking. And do not forget about their sports betting platform that will come live later this year, and I think will be huge for their growth. Stock number 3 in this video is the almighty Context Logic, ticker symbol WISH. We all know that e-commerce is a huge industry with a huge growth potential year over year, and that is why I talked about Amazon before. Now, which is a very undervalued stock within the industry. As you can see, it is currently trading at $7.94 per share with a market cap of $4.91 billion. What impresses me the most is that they have a market cap of $5 billion and have a revenue in the past 12 months of almost $3 billion, which is a year-over-year growth of over 75% year-over-year, and a very healthy balance sheet with $1.6 billion in cash, almost $2 billion in total assets, and $1 billion in total liabilities, so a stockholders' equity of $930 million. So I simply don't understand how no one is talking about this stock. I do know from many of you that have not had a nice experience with the app. I have only bought twice in the app, as I don't tend to shop a lot, to be honest, not even on Amazon, but everything arrived fine for me. Also, we are all seeing that they are growing around 75% year over year, so they are certainly doing something right, as more and more people are buying in their platform, and I don't think that growth will stop. Again, a $5 billion market cap with a $3 billion in revenue and $1.6 billion in cash. It just blows my mind, to be honest. Such an undervalued stock, but I do have to say that it is a very volatile stock, and with a short volume of 24%. I do know that someone released a very bullish article, which I will talk about that later on the week. Last stock in the list is TrueLeaf Cannabis stock, ticker symbol TCNNF. I'm sure almost most of you invest or at least have checked out any cannabis stock, as the industry is expanding very fast. In this case, I decided to invest in TrueLeaf instead of any other cannabis stock because of their growth, rapid expansion, and most importantly, their profitability. It is currently trading at $37.96 per share and has a market cap of $6.27 billion and a 4 PE of 38.02. Reported a revenue growth of 102% year over year and $193 million in quarter one, and a net income of $30.1 million. They have over 480,000 patients in Florida, 83 stores in Florida, and total of 2 million square feet cultivation in Florida. I talk mainly about Florida because they are the leaders in the state for medicinal use, And because they are based in Florida, but they are in 6 different states as well. Now, with their latest harvest acquisition, they will have the largest retail and cultivation footprint across the US, will be the most profitable as well, and gives them the expansion into new markets such as Arizona. So after this acquisition, they are now in 11 states with a little over 3 million square feet cultivation and 126 operational dispensaries. I do have about 2 or 3 videos talking about this stock, so I would recommend you go and watch them if you are interested in the industry. Also, they are the only profitable growth cannabis company, so that is very, very attractive in my opinion. I do have to say something very important. We have to understand that Fubo, Wish, and Trulieve stock are very, very volatile stocks, and I do not expect that to stop anytime soon, as it happens with many companies as well. I'm saying this because I have seen many comments from you guys saying that this stock is down or that stock, I'm losing a lot of money, so I want to sell for a loss. I would never recommend any of you to invest in any of these companies if you don't believe in them and cannot see a 30 to 40% drop, because even though that is not normal in the stock market, it kind of is with growth stocks like this ones. Also need to understand that even though they are very, very volatile stocks, it could take them time to actually see a nice uptrend as well. And I'm going to take Tesla as an example here. It is a very volatile stock, it is a growth company, but between 2016 and 2019, the stock went up only 3 to 4%. Yes, it went up over 50% between 2016 and 2018, but this shows us how volatile growth and innovative companies are, and also show you where they can get. After all that said, I want to make sure you guys understand I'm in this for the long term, and I'm not expecting to sell next month with 100% return, because I don't think that's going to happen unless something spectacular happens to the company. Now, which stocks are you watching or buying next month? Let me know in the comment section below. Hope you enjoyed the video. Please subscribe and smash that like button. Thank you, and see you next time.